Hello traders, and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be talking about order blocks or POIs, really, essentially whatever you want to call it, right? We're going to be going over 3 rules that I use to filter and potentially pick what order blocks I'm interested in watching. And essentially, if you apply these 3 rules that I'm going to be giving you here right now, you're going to be having a higher probability in selecting your order blocks and actually picking those that have a higher probability of actually providing you with some sort of move. So, by the way, this over here, what you're currently watching over here, is an example of a order block right on the top. I took a GJ sell over here, which was shared with the members in the community, people in the mentorship, and know that. Once again, if you want to have access to that, you can find the link in the description below. But essentially, didn't execute right at the top. I actually managed to catch an entry somewhere over here within these key levels, and just recently close out for roughly 250 pip profit. So this week has been particularly good. Just wanted to share that with everybody. The week before this one, I had a losing week. Nonetheless, as long as you keep executing well, managing your risk and executing on trades that you believe have an edge, you will be good in terms of actually making money in the long term, right? But that's not the topic for today. As we said before, we're going to be talking all about order blocks. We're going to be going over a 3 rules list that you can start implementing today to actually pick the right order blocks when it comes to executing your positions. So if this sounds like something you want to learn today, make sure you stick to the entire video, because I can guarantee you your confusion in order blocks is gonna get demolished if you actually apply what I'm gonna be teaching you here today. So with all that being said, guys, let's get started with today's video. We're going to be jumping into a whiteboard for the example. All right, everybody. So here we are on the drawing board. As we said, today's lesson is going to be focused on 3 rules for OBs, and it's going to be a little list that you can probably go through, and it will help you eliminate lots of confusion, right? Because when you look at a market, and this is an idea that many people struggle with, you will see up and down moves all over the place, and you're going to find that you're going to be able to identify order blocks everywhere, right? One over here, one over here, one over here, right? You get the point. Not going to be drawing all out, but you'll see that you're going to have OBs probably everywhere, and it's going to get very confusing when it comes to actually determining which one is going to be better for you to try and take a position, right? Which is essentially your goal as a trader. So let's go through the simple checklist that I use on a daily basis for all of my trades, and I make sure that these are all in place, right? First of all, it needs to be part of a break in market structure, okay? And I know there's confusion around this topic as well. Which time frame should the BOS be on for the OB to be valid? Things like that. Guys, very simple. If you're looking at a 4-hour break, right? Let's say that this over here is your 4-hour break. Then you're looking at a 4-hour OB over here. It doesn't mean that you cannot refine it, right? Because as you zoom into lower time frame, let's say as an example, you go into your 30-minute time frame, you will see a little bit of a refinement. Maybe this segment over here is in balance, and you just want to wait for the 30-minute OB, right? And that's fine. But you're not picking a random point. You're waiting for this specific area, because this is where the market is telling you that we shifted direction, right? As you can see, we broke through a previous structure point. we established an impulse. So if you get a leg down that looks like a retracement, very important, right? If you see slower price action, the distance between the lows is rather slim compared to the up move that we had previously, then you know that this is a good OB, okay? And once again, there's not such a thing as 100% probability, but this has a good opportunity for you to get involved into longs, right? Whether that's going to hold here and drop, you don't really know. Whether that's going to be making new highs, right? You don't really know. Whether it's going to fail, you don't know that ahead of time. All you have to try and do, this is the same thing that I tell my students, is put your money in the best position to win. Now, when you look at this example, is this a good position to put your money on? Definitely, right? You're waiting for a particular key price point. You've identified a particular area you want to look for longs, and you've been patient enough to wait for that. Because let me tell you a secret over here, majority of traders will not be able to do that, right? They will FOMO here, maybe it turns around for a bit, and now they're funneling into buys, and then they get taken out. And when it actually comes to where they wanted to um, initially execute on, they've already lost so much money that they're not going to be putting the trade on, right? And it's very sad, nonetheless, very true. So this is the first criteria that you want to identify, okay? And I think I made it very clear. You want to have a BOS, and you want to be looking at the POI, order block, whatever you want to call it, that led into that break in market structure, okay? Otherwise, there's no business for you to be doing at that time. And once again, if you see that the impulse moving up, just like in this example over here, right? The impulse moving up cleared some lows, trend line liquidity, equal lows, and then broke structure. Whoa, then you know that that is an even better scenario, because what do you know? Well, people got trapped going short over here as it traded below the lows. Those that were trading the trend probably saw this as a break and say, hey, you know what? Broken below the lows, let's keep selling, we're going that way. And all of a sudden you get this move up. What does it tell you, right? You have trapped volume over here. Once again, not going to get into too much detail on that topic because that is a topic for a future upload, right? Where I'm going to be specifically talking about trapped volume. Not many people understand it, but it is such a powerful concept. It will help you a lot with your direction in terms of understanding where orders have been collected and where the market is likely to move. Okay, so that was point number one in terms of your checklist, right? Let's move on now to point number two, which is going to be something very simple to understand as well. Avoid those sitting on liquidity, right? Something that you have to understand as well. As an example, let's get rid of this. Let's say we use a bearish example this time. So you can see that the market did this, right? Created equal lows and then provided a break over here. And you know that the POI you're watching, which is this segment over here, maybe once again, that's your 1 hour POI. You zoom into the 15-minute, you get a very nice refinement. But what do you know about this POI? Well, yes, it is correct. Your checklist number one is fulfilled. It was part of a BOS. Nonetheless, you can see what it is sitting, right? It is sitting on equal highs, retail resistance right over here. So what do you know we have above this area? Right over here, we have multiple stop losses. So seeing a quick spike over here, right? In this case, what you would want to anticipate is a spike through the POI, right? Very important, spike through the POI and a break. If you get this, this is one of the best opportunities you can have in the markets, where you have that POI or you know people are going to be trying to go short, or that resistance where retailers have their stop loss just above, and you see that quick spike. Once again, you want to see a quick grab, breakdown, and now you know that you want to be shorting, whether you want to wait for it to come back to this level and go short, or you want to wait for this particular POI to be tapped. Doesn't matter, right? But please avoid those sitting on liquidity. And this is just an example for equal highs liquidity. There's plenty of liquidity types in the market, and you have to have a little bit of understanding in that. If you're confused with liquidity types, there is a video in my YouTube channel which goes very in depth on that idea, so you should have no problems understanding that, right? But just to remind you guys, you want to avoid those on trendline liquidity, equal highs, equal lows, Asian highs, Asian lows, and things of that nature, okay? If you have been working with POIs that fulfill any of these criterias, now you have your answer on why you've been getting stopped out. Maybe you get stopped out over here, the market reverses essentially, and now you're confused in terms of what's happening in the markets, right? So that's the checklist rule number 2. We're gonna be moving on to checklist rule number 3 right here, right now. Okay, so let me get rid of this rather quickly. We can do this, we can do this, and we can do this. So for rule number 3, I've talked about this quite a bit as well. Discounted OBs. It's so simple to understand. Higher probability. Okay, so you have to be measuring the legs that you're working with, okay? And let's print over here a new example for you guys. So once again, consolidation, spike through the lows, right over here, equal lows, trapped volume, right over here, BOS to the upside, break in market structure over here, right? Let's say this was your previous structure point, and now you're saying, hey, awesome, right? This is the leg that I'm gonna be working with right over here. And you identify this as your impulse, and all you're doing now is waiting for that retracement into a POI to go long, right? That's your expectation, and it's correct. It is what you should be expecting. Now you come across the issue that you're gonna be having OBs one over here, one over here, one over here, one over here, and now you're asking yourself, where the hell do I want to go long, right? We have a POI over here, price may do this, 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 you don't really know, and now you're confused. So what you have to do is be able to filter. Those are going to have a lower probability, which are going to be these ones over here, right? The ones on the top. So how do you do that? Well, you grab your FIB tool. Once again, I don't have a FIB tool over here, but you want to be measuring the leg from bottom to top, and you want to be only looking at discounted areas, which are going to be below the 61% retracement. Okay? So that way you've eliminated essentially all these POIs over here, and now you can start focusing on the ones that truly matter, right? Because at this point, any of these could be the move up, right? So you once again, and I want to make this very clear, you have to understand that there is still a probability that price taps into the first one and continues pushing further up. This can happen, and it will happen. It will continue to repeat. However, the probability of this is much lower than the probability of this. This is all you have to think about, guys. Trading is a game of probability, right? This can happen, but this is like this has a higher probability of happening, right? So you want to stick to this. You want to be able to say, hey, you know what? If it bounces here, moves up, I don't care. I could have not predicted that. It is what it is. I want to be a disciplined trader and wait for this because I know I'm going to have a better opportunity to make money. And that's for 2 reasons, right? Reason number 1 is because you have a bigger range to the upside, right? The lower you enter your position, the bigger the leg is going to be to the upside, the bigger the room you have to go up and maybe retest the POI high over there, right? If you enter over here, your POI high is over here. Who knows if price is going to tap here and start shifting and going bearish, right? You don't know. Therefore, if you wait for the POI on the bottom or below the 61, you're going to have a much bigger range as price starts moving up and in your favor, right? So I did try my best to make these different rules very clear. I can guarantee you, if you start applying these rules, right, and every time you pick a POI to trade, you go through this rather slowly, you say, hey, is it a part of a BOS? Yes. Is it sitting on liquidity? No. Awesome. Is it at a discounted area? Yes. Great. This is a great area for me to try and go long. Doesn't mean I'm going to be going long, right? Maybe it does this. Or you want to be able to pay attention in terms of what's happening over here. And if you see market structure shifting, then you take the long and then you say, I want to target here, right? Or potentially higher, right? Depending on what the market is doing at this point. But you want to be able to go through these different criterias because you're going to eliminate lots of confusion and you're going to be focusing on things that actually have a higher probability of occurrence. So with all that being said, guys, we're going to be jumping, it's going to be very quickly, we're going to be jumping into the charts and we're going to be um, focusing on just applying these rules and picking potential POIs. That's all we're going to do. So with all that being said, I will pause the recording and we will be jumping right back into the charts. Okay, traders. So for this last segment of the video, once again, very simple. We're going to be going over the checklist and we're going to be applying that to the charts, right? So let's try and see. So as you can see, right, these are my areas and I want to make you pay attention in terms of why these are my areas, right? So first of all, you can see this one over here. If we flip the leg from bottom to top, right over here, this is my impulse. This is the very same example that I was talking about, right? Where you have a low, a spike through the low, a break in market structure to the left, and an impulse, right? You can classify this move up as an impulse. So therefore, this POI over here is part of a BOS. It is not sitting on liquidity because the way that I identified liquidity is this segment over here as trendline liquidity, right? Lots of Asian highs over here, Asian lows. Yes, we see that. But essentially, this is a liquidity-free area, right? So it is not sitting on liquidity. And as you can see, it is just on the 61%, which is fine for me to determine as a POI. And as you can see, we're doing a live example over here. The market's moving. The market has invalidated this area. I had a particular key level that I wanted to watch, which is 23450. And if we zoom into the lower time frame, maybe a 5-minute frame, you will see that there is nowhere here to be seen any sort of bullish confirmation to go long, right? If you think that these two bullish candles mean that you have to be going long over here, you're very confused with confirmations. There's nothing here to tell you, even if we go into the 1 minute, that you should have been going long over here. If you read the order flow, this has been nothing but bearish delivery so far, right? And until that changes, you have to accept that this should be continuing. So therefore, even though this was a valid POI, right, doesn't mean that you're going to be executing over there. So the next thing that I'm doing is waiting for my next POI, which, as you can see, fulfills the very same criterias, right? Discounted, origin of the impulse, even better. We see that we mitigated over here on the top, so therefore I'm expecting a deeper mitigation, maybe into some key levels over here, right? So those are just simple examples on why those POIs make sense. Now, in terms of the, excuse me, in terms of the bearish POI, you can see the one we have on top. And I told my group about this. Didn't quite like it because of the Asian high on top. Nonetheless, I just wanted to highlight it for the purpose of denoting my range. But this would technically be not a valid area to try and go short because of your POI. You can see that it's sitting on liquidity, right? We have equal highs, what do you know is sitting above here? This would be a scenario where I would have wanted to see a spike through the POI, a breakdown, and a mitigation to go short. I would have not expected this particular POI to hold, right? For the sole reason that even though it broke structure over here internally, right? And internally here once again, it was sitting on liquidity, so I would have not tried to take a position over there. I would have waited for the spike through the area, the breakdown, the shift, and the drop, right? Another example over here. Many traders probably try to go short over here, right? This particular first mitigation would have not been valid because once again the break was over here and it just occurred over here. So this was just a initial mitigation which you could have not taken either way, right? So as price is coming back up right over here, people are trying to short, right? And you have Asian highs, so this is, you know that this is a bad area to try and short. So what does the market do? Well, very straightforward. We clear the high right over here with the spike up. We probably shift structure on a lower time frame. We can try and actually see if that occurs. So let me see. Yes, so it's right over here. Yeah, you can see, right? So we shift over here. We return to the origin over here, right? We then shift internally once again, if you were watching that, and it provided you another entry right over here to try and go short, right? But once again, you're not expecting that POI to hold. This is what I wanted to make clear for you guys, right? By the way, this is Euro USD, same idea, break to the downside, liquidity right into the area, POI to go short, and you can see what happened over here, which once again I didn't execute on this, was not able to capture because of news. This was a news spike, and this happened within a minute. If we go through the lower time, well, not within a minute, but rather quickly. So there was no opportunity for me to go short over here, which ended up meaning that I missed the trade. I was also looking for longs over here, but as you can see, price never really shifted bullish, so didn't execute, and price just kept dropping. So with all that being said, I hope you guys enjoyed the lesson. I did try my best. Remember the 3 rules, they will help you. And yeah, with all that being said, guys, thank you very much for listening. I appreciate every single one of you. If you made it through the entire video, you're a legend. Feel free to drop a comment below with some video suggestions. As I always say, they do help me out a ton. So I will see you guys very soon. Take care, everybody. Have a great weekend, and thank you for listening.